afternoon, everyone. Hope everybody's having a great day. Uh, hope your business is going well and all that kind of good stuff. We're doing a webinar today on mortgage call reporting. And this is kind of one of those things that we hear a lot about, and we offer it as a service, which we'll talk more about as we get further into the presentation. But it's one of the more important things. Now, for those of you who might be on the webinar today who are a member of the banking or the credit union committee, this is not something that you have to deal with, but it is something for our independent mortgage bankers and mortgage brokers that are out there. Mortgage call reports are a requirement. So we're going to be talking about today the who, when, what, and why of mortgage call reporting. So if you're interested in it and happen to be in the banking community, well, you're welcome to stay on the line. But this is geared today more toward our independent mortgage banking and mortgage brokerage friends that are out there. So if I'll see if I can get the screen to advance for me here. That's always a challenge. One thing I want to mention, if you have any questions on today's presentation, you can contact us at info@thecommonwealth.net. And please like and subscribe to our videos on YouTube. This will be placed on our YouTube channel. And so we would like for you to join us there. And if you want to see a repeat of the presentation, something like that. And we have a lot of other information there. You can also find us at our normal website, www.thecommonwealth.net. So at any rate, hope everybody is ready. So we'll kind of just dive right in today. And once again, we'll make another crack at advancing this. There we go. So today we're going to be talking about the mortgage call report, or the MCR. You'll hear me refer to it as the MCR all through this presentation today. First of all, the MCR is required as part of the SAFE Act, which came about roughly 10, 11 years ago now. I'm not sure the exact date offhand, but it was part of the licensing requirements that came about after or during the initial housing crisis, or the subprime crisis of 2008, 9, 10, right through there. First of all non-bank lenders must complete an MCR each quarter. Absolutely required. Reports are due 45 days after the end of the prior quarter. You have to be a little careful with this one because not all months have 30 days in them. February has fewer, and of course, we have some that are 31 days. So you have to kind of keep yourself aware of that. It's not a specific date, but it is going to be 45 days after the end of the prior quarter. Now, the MCR is going to outline the applications, dispositions, monetary compensations for each loan closed during the prior quarter. Closed loans are broken out into forwards, reverses, banked or brokered. And when we talk about banked, that's for our mortgage banking friends who have warehouse lines, or if it's brokered, if you're a mortgage broker, as well as the loan type, FHA, VA, USDA, conventional, etc., and as well as the purpose of the loan, purchase, refi, and so on. In addition, as part of the MCR, it must list all the loan officers who had closed loans and the dollar amount for the quarter. Now, one thing I want to mention about that, and we'll talk about this more as we get into the actual fields, depending on the state, they may want a list of all the LOs, and even if they didn't close anything, that depends on your state. It's a good idea just to include it for the states that don't care. It won't matter for the states that do care. It can save you some time and problems in the future. All right. One of the big things that comes up with MCR reporting is, what happens if I don't? Okay. First of all, this is not something you want to mess with. I will go ahead and tell you, this is definitely not something you want to skip. First of all, failure to comply, it can result in some serious, serious consequences. And these are included but not limited to notice of noncompliance in an MLS system, not something you want. Occasionally you'll get that. You may see those notices, but you'll get a notice of noncompliance. You may receive civil money penalties for late and or inaccurate reports. One thing I will mention, we have seen this come up before with mortgage lenders. They don't file on time and they get a nasty gram from their state regulator saying, hey, you didn't file. Please pay your penalty of X number of dollars per day, or total of X, whatever it happens to be, depending on your state. And these states take it serious. And even one day, I forget who it was. I think it was Pennsylvania. We saw one for somebody where the lender did not come. They got it there, but they mixed up the calendar, and I forget what date it was due. They were one day late. They were 1 day late, and the state of Pennsylvania charged them $500. That is not something you want to do. I can think of a lot of things to spend $500 on, but you may have civil money penalties for late and or inaccurate reports. And I'm going to talk one thing I want to mention about inaccurate reports, just I'll come back to it in just a moment. Uh, but that's a big thing too. And by the way, the regulators are really ramping up their enforcement on inaccurate reports. They're tired of it. This is the short version. You could have, excuse me, suspension of your lending or broker license. Uh, Probably not something they're going to do just for a late report. However, if you continually report late or not report at all, you could easily have suspension of your license in that state, and that's not something you want to do, obviously. Finally, you can have, in extreme cases, revocation. Again, not something you want to do, um, because revocation is, if you get revocation for failure to uh, fill out your MCR report, a lot of the other states take a hard look at that. And if you are looking to go into other states in the future, that can really come back to haunt you. So, all of these penalties are things you don't want to mess with. Again, they're not so much out to get you. They really want the accurate information, but at the very least, you're going to get a notice of noncompliance and or civil money penalty, depending on your state. And again, the amount of the civil money penalty is going to vary by the state on that. And then, of course, suspension and revocation, that is obviously something you do not want to deal with. And so let me go to the next slide. If I can get this to work. Nick, where are you when I need you? All right, here we go. Accurate filings are a must. And this is kind of what I was talking about on the inaccurate filings a little earlier. First of all, most MCR reports are inaccurate. One of the things that we do at the Commonwealth Group is we actually perform audits on mortgage call reports, and we actually, if you work with us or decide to work with us, we'll actually fill out the MCR for you. Uh, we cannot believe the level of inaccuracies that we see on this. Um, I would have to say probably 90% are inaccurate. And I mean, some of them are minor, some of them are major. It just I mean, they're all over the board. But we're going to talk a little bit about the fields in a little bit. But the big thing here is going to be accurate filings are a must. Again, we mentioned a while ago for late or inaccurate filings. At some point, you are going to get an audit from your state regulator on your MCR, and they're going to take a hard look at it. And if you're lucky, they'll just tell you, hey, correct these errors. If you're not lucky, or if they're coming back for a second review, it can result in some dire consequences. Again, but lots of inaccuracies on this. The biggest one that we see is failure to correctly carry over loan data from one quarter to the next. This is a big one. This is a very common error. Um, in other words, we ended a quarter with $2 million in our application pipeline. Well, that should be the number that should carry over into your next quarter at the beginning of the quarter. We see a lot of files where that doesn't happen. So it's like I ended Q2 with $2 million in applications. I begin Q3 with $3 million in applications. Well, that doesn't match up. And by the way, that is one of the errors that the regulators take a hard look at it, because that indicates that you're not doing that right and there may be other errors. So they take a hard look at that one. Incomplete filings. Oh man, just what can I say? Just incomplete. I mean, we see lots of data left out. Inaccurate financial information. And what we mean by that is going to be you have to disclose on your MCR what you made on loans, especially if you're brokering. And, we see a lot of errors there. Inaccurate loan information. We banked the loan rather than brokered it, but it's reported wrong. uh, Maybe the loan had some other characteristics. We saw a particular situation that we had to go back and correct, where the uh, mortgage broker reported everything under the reverse mortgage lines. He didn't do reverse mortgages as a lender, but he reported everything under a reverse. That was a mess to straighten out. So inaccurate loan information can be a big problem. Falsified data, holy cow. And the thing about this one is, actually, to be honest with you, This one is probably the number one error. It pains me to say it. It pains me to say it. But we have seen deals from a lot of lenders, which you look at the MCR report and you suddenly realize every quarter they've taken exactly $2 million in applications. Their pipeline never grows. They close the same amount of loans. Everything is identical. And it's obvious that they just duplicated the data from one quarter to the next. By the way, the regulators look at that. If you're lucky, they'll say, oh, you don't know what you're doing. You didn't realize it. If you're lucky. However, most people don't get that lucky. If it's pretty clear that the data has been falsified, so in other words, you have quarter after quarter after quarter of identical data, the regulators are coming. It's not a matter of if, it's a matter of when. Now, the good news is if they have not arrived, then you can basically go back and correct and or amend, and that happens. And they will let you do that. But if they show up saying, we've noticed something, you've got a problem. You have a serious problem. And that one is hard to argue away. We actually maintain contact with a lot of the state regulators that are out there on MCR. Um, and there's one, and I hope I've got this quote right. Hopefully you can see it. It says, we don't have an interest in civil money penalties or, or inaccurate information. The department could practically shut down every lender or broker in the state completely if they really enforced the MCR as far as accuracy. And that came from a large Southeastern regulator from a state you would know. Many of you would know at any rate. Not Tennessee, but I'm sure they would, where I am, I'm sure they would feel the same way. But the big thing is they want accurate data. That's what they want. They're not interested in playing gotcha or anything like that. But what they are interested in is accurate data. So uh, this is something you want to take seriously, folks. It's not something you want to just sort of ignore and laugh off. This is a question that we get. How far back do they audit when they do come in and audit? Again, every state is different. Some states will look at the last 12 months, others will go back 3 or even 5 years. Now, I will tell you, generally, they're all going to go back 12 months, all of them. Now, as far as going back further, they might, because it's kind of like dealing with the IRS. If they find a problem, they'll keep going back. I have seen them go back as 5 years. That's miserable. When they do find errors, especially in the most recent quarter, they'll go back to the prior quarter until an accurate report is found. Okay. Basically, these are referred to as rolling or cascade errors. In other words, something went wrong, say, in Q2 of 2020, and then that results in errors in Q3 of 2020, and then Q4, and then Q1 of 2021, and on and on and on. And we're going to talk a little bit about this because one of the things about MCR is the errors do tend to cascade. If you have a situation where you are off in a quarter and you don't adjust it and get it right, you're going to be off the next quarter. And it just keeps going on that. Now, here's the thing. If the regulator finds out it appears to be an inadvertent error, I mean, the law allows for errors. Everybody makes mistakes. I mean, we've all at one time or another had something where like, oh, at the very least, oh my gosh, I'm in a 40-mile-an-hour zone and I'm doing 55, or whatever it happens to be, or in my case, more than that. But like I said, that happens. It's an inadvertent error. Okay. They may only require corrections. Okay. And they may only require that you go back to the point where that errors occurred. They'll make you go back to where you have an accurate filing. And then you have to bring up all the prior filings until it's brought up to the current quarter and they're all accurate. That's if you're lucky, kind of thing. But again, they realize errors happen along the way. If it's determined that the errors were due to willful misconduct, they will definitely make you refile. And again, you can be looking at civil money penalties. And if particularly egregious, you can have criminal prosecution for perjury. Because when you complete this, there is an affidavit at the end that says this is accurate to the best of my knowledge and belief. And where I mentioned a little earlier about some of these folks that we've run across where they have the same data every quarter, every quarter, every quarter, and they're saying this is accurate to the best of my knowledge and belief, you're going to have a hard time proving that. It can result in penalties of perjury. They take this very seriously, folks. Not something you want to do. Again, the key here is having accurate, timely findings and being sure that everything is up to date. All right, I'm going to quickly take a look at NMLS data fields. Now, the thing about this is I've got all zeros in here. One thing I will mention is that if you have a state where maybe you didn't have any activity, you can't leave it blank. It's got to be zeros. Now, this would be for somebody who has no activity. And again, I took this out and that sort of thing, and we did a sample one here. But at any rate, so that's why these are all showing as zeros. I hope that makes some sense. Applications at the beginning of the period, that's at the beginning of the quarter. So we are coming up on a quarter change here. So we go back, we take a look at Q3. Where did they end? I had 1,775,000 at the end of the quarter last year or last month. Excuse me, I'll get it right here in a minute. Last quarter on that. So that should carry over to applications in process at the beginning of the month. They want the dollar amount, the number, and then the average size, which will compute. Basically, this is a big spreadsheet. It is a very user-unfriendly spreadsheet. It is not like Excel that automatically updates. It only updates when you save it. That's another issue that we'll talk about at a later time. But applications in the beginning of the period, applications received. Now, very important here, applications received are based on how your company defines an application, which, by the way, that's another webinar that we have done. And you can go back and check on it on our channel if you haven't seen it. How do you define an application is very important. That is part of your policies and procedures. And unfortunately, we find a lot of lenders, banks, other folks involved in the mortgage business, they don't define an application. This is how you define it. Now, I will tell you this, the 6 trigger items, name, social security number, income, loan amount, birth date, property address. I think I got those all right. I'm doing that by quick memory here. I defy anybody to tell me that's not an application. That is an application. Now, if your company defines an application that way, fine. There are people who say an application occurs when I pull a credit report. Okay, that's fine. However you define it on that, but you've got to have written policies and procedures on that. Again, check that webinar out. Applications received is exactly what it says. I got 5 applications in the last quarter. Oh gosh, I hope you got more than that. I got 50 applications in the last quarter. Total dollar amount, here's the count, that sort of thing. Application approved, not accepted. These are dispositions of files. Now, this can be you've approved the loan and the loan doesn't close. The easiest example is a rescission. I'm not going to spend a lot of time talking about these various categories. These are basically HMDA categories. This is sort of a ongoing HMDA report in some ways. Applications denied, exactly what it says, withdrawn for the files, incomplete. Pre-approvals, if you're doing pre-approvals, why? Don't do them. They're scary. They're really scary. But anyway, pre-approvals. And then finally, the net change in application amount. This is an automatic on that. Or excuse me, this is where you start out with a particular loan number and you say, I'm taking $100,000 loan, and then they decided to do more down and it's 90,000, that kind of thing. So your total application pipeline is an automatic field that's automatically going to compute. The next thing you have is the results. How many did you close and fund? How many were left at the end of the period on that? So applications in process at the beginning, plus new applications, less dispositions, less closed and funded should equal applications in process at the end of the period. Now, these are for files received directly from the bar. If you're involved with third-party lending, you got that one too. You have to do those. You have to break those out separately. And again, we're not going to spend a lot of time on this today. We could literally spend hours on this and how to do it. All right, next slide here. There we go. Again, total application pipeline results, that's a carryover. Closed loan data. This is for all the loans that you closed in the prior quarter. Simple as that. Uh, what did you broker? What was retail? What did you do wholesale? And that is for loans that you approve for on behalf of another party. Brokered simply is loans that you table funded. Retail is what you utilize warehouse lines for. We have some lenders who are straight warehouse banking lenders. Everything goes under retail. We have some lenders who broker a few deals and do banking. So they'll have both. So you have to segregate them. And then, of course, wholesale is going to be anything that closed in your name on behalf of another lender. So if you are involved in third party origination, that's where that information goes. You have a breakdown on property type, the purpose of the loan application, purchase, refinance, home improvement, that sort of thing. Again, however you define it. Uh, Hopa, I Hopa you don't have any Hopa loans on that. Not many people will actually, not many investors will buy a Hopa loan. You can run into it on very low loan amounts, but we see this very rarely right now because the percentage is, you've got to get I forget, I believe it's 6% for closing costs. Well, if you got a $500,000 deal, generally closing costs aren't going to be that high. But at any rate, we don't see a lot of those. But all kidding aside, I do hope you're not participating in files that have a HOPA designation. Lien status, first lien, subordinate lien, not secured by a lien. This is, of course, going to be first mortgages. I would dare say the vast majority of people are involved in that. Uh, Second is going to be your subordinate lien is going to be your second mortgages and your HELOCs. I know there's been some question as to whether HELOCs are included. NMLS doesn't even know, folks. They're inconsistent. We do have a change coming up in early 2024, and I think it goes into effect for Q1 2024 files, which will be reported in basically April of 2024. We will have an update at that time on that. Reverse mortgages, and lender fees, whatever you're collecting, origination, tax service, underwriting, processing, et cetera, et cetera. Again, these are just basically broken out, whether it's a brokered or a banked deal. Simple as that. Other information, reverse mortgages. Heckam, you may be involved in reverse mortgages. I mentioned the lender a little earlier who put everything under this category. I have no idea why. Don't have a clue. But if you are involved in that, it is there. And again, the purpose of the reverse mortgages, etc. On that, we're kind of down to the bottom here. Again, total of forward and we have a total of forward and reverse mortgages. Obviously, if you're only doing forwards, then that's all you're going to have. It's basically a duplication at that point. Or if you are doing both forwards and reverses, it's the total. QM and non-QM, this is getting to be a bigger thing. I mean, when we first started doing this for lenders, we didn't have hardly anybody involved in non-QM lending. We're seeing a lot of it right now, especially considering how the market has been the last 6 months here in 2023. We're seeing a lot of non-QM product, but you have to break it out. So if you're in the mortgage business, everything generally is going to be a QM or a non-QM loan. Not subject to QM would be commercial. We don't see a lot of that, but it is out there. Again, repurchase information. Finally, gross revenue from operations. That's for the quarter, not year to date. On that, they will take a look at that. So there is a financial component for this. Finally, service release, service retained on that. Most independent mortgage bankers and certainly mortgage brokers don't generally retain servicing kind of thing. You may have a loan that's carrying over, but you've marked it for sale. Maybe you have a loan that you sent to an investor, for example, but it hasn't been purchased yet. That would still be considered service released at that point on this. All right, moving right along. There we go. The next field that comes up, and we've had to kind of pull one here, and we've what is it? We've redacted the information. I think that's the fancy term. We've marked through it. You have to enter the data fields. for your mortgage loan officers for that particular state. This one just happens to be one for this particular state who didn't have anything going on at the time. Now, this is what I mentioned a little earlier about you can take a look at this. Is it something that is needed or not needed, depending on the state? Some states say, well, we're only interested in what a particular loan officer closed. Some states say, I want a list of all the loan officers, and even if it was zero, put a zero in there. Depends on your state. We've got the list. We'll be happy to work with you on that explanatory notes or warnings, that sort of thing. And finally, here is the perjury statement with the attestation, which I'm sure everybody's familiar with. They take it very seriously, folks. Now, we're kind of going through this at a flying pace. There is a lot associated with MCR, and to top it all off, we will be getting the new version of NMLS, MCR version 6. Just think on that on March 16th of 2024. We have to start collecting data for it starting January 1st on that. So it introduces changes in data collection and reporting. They're also considering some options as far as leniency. We all know how that one worked. We'll see. This was originally supposed to start, I don't know, a quarter or two ago, but we're out to that because everybody says, why do we want to do this in the middle of a year? Most people are on a 12/31 fiscal year. Nobody really wanted to do this until then. So at any rate, it's coming. And if you are doing it, it's going to be a change. I will brag on our team that does our MCR. We're already working on it, getting ready for that. So more to come on this. I'm sure we may have an update to this webinar somewhere along the line. Finally, I want to say one last thing as we wrap up today. We've been talking about mortgage call reporting. That's some of our sales team there. And if you look on the left, you see a really handsome looking guy there at any rate. But at any rate, one thing I always say about this is the Commonwealth Group is here to offer fulfillment and consulting services, both. We can take care of your MCR, take it off your hands. I can't tell you how many people we've talked to that we do this for that says it's the best decision they ever made because it gets them out of the paperwork filing and we take care of it for you. And one of the things that we will do is we'll go back and we'll actually do an audit. And we'll start auditing and saying, how far do we need to go back if there are corrections to be made? If we see that things are working out for the last 12 months or so, we're great on that. There's some folks we've had to file amendments for. We've had to go back as far as 4 or 5 years in a few cases, but it's better that we find it than your regulator finds it. Not something you want to mess with. Our cost on this is based on number of LOs and the number of states that they're in. We work, with you to get across timely reports, and then we can assist with ongoing reporting. So if you are on this webinar today and you are tired of dealing with mortgage call reports, let us know, and we can certainly help you with that. So I think it's money well spent, if you ask me, and we've got teams that are devoted just to this. So again, please take advantage of it. I mentioned earlier, if you had any questions on this, you can certainly send it to info@the-Commonwealth Group, or if you want to reach out to either one of our members of our sales team who covers this, that's Martin Luplow and Cody Person, and you can talk with them about more information as well as getting a quote for your MCR reporting for your for your reports. I'll get it right in a minute. It's been that kind of a morning, folks. At any rate, Martin Luplow, the guy on the left, Cody Person, the guy on the right, you can reach out to either one of them, and their emails are here, or of course, the info@thecommonwealth.net. Again, we thank everybody for coming today. If you want to watch a repeat of this performance that we've had today, or a repeat of this webinar, you can find it on either our website at www.thecommonwealth.net, or you can find us, better still, on YouTube, and you can see a repeat of this webinar along with several others that are out there. And we ask that you like and subscribe and that sort of thing to it to go over. So if you have any questions, you can certainly reach out to us. Again, like, subscribe on YouTube, and let us know if we can be of assistance in this. This is one of those things, again, it only affects our independent mortgage lenders and broker friends, but for those of you in banking, don't worry. We have a program on Community Reinvestment Act coming up a little bit later this year. So anyway, hope everybody has a great day, and we'll be talking to you soon. Take care now. Thanks, everyone.